morning everybody, it's Chris here from Serene Education with your 4 majors analysis update for the 27th of October 2011. Hi everybody, hope you have a fantastic evening. Anybody was listening into last night's the Euro Summit meeting, it was quite interesting. News filtered throughout the night about the latest on the measures being passed by the European board to try and stem the problems in Europe, and we had some very interesting news. I think the biggest winner out of this whole meeting was Greece. Greece was indeed the biggest winner after securing a deal that will have its existing private sector debt wiped out by 50%. Can you believe it? So that's quite nice for the Greek community. And there's talk that Greece will get a package, a new aid package in around roughly 130 billion euros. This is the second part of their bailout. So let's throw some more money at a problem. And we'll start with 130 billion. So there we go. But yes, Greece definitely getting the benefits from this meeting. 50% Greek cut in debt. Talk that 65 banks requiring at least 250 billion euros in additional capital, so that's going to be interesting. What's it done for euro? Straight away we saw the Asian market take it. We traded slightly lower going into the Asian session, but as the news came out and filtered through, we saw the Asian session taking it higher. And as I mentioned, 1400 is our long-term support and resistance level after the 1300 breach and trade higher, and sure enough we are sitting there on the 1400 as we speak. Slight penetration through, but we've now pulled back. You look at our smaller time frames, the 4 hour, look at that. Upside, swinging higher. Excuse me, all the moving averages below price, and we had a lot of inconsistent or consolidation in and around the 13900, most of it happening above, and then we had this massive candle yesterday cancelling all of this movement out of the way. This was the hesitation we saw yesterday afternoon. Prior to the meeting, pretty much suckering a lot of people into the trade and then spitting it out as news came out that everything was favoring a good result. Well, in this particular case, Greece getting the great result. And going into this morning, we've seen price really rallying to the upside. High highs, yeah, testing 1400. You can see price action still not. It's gone through, but still playing with it at the moment now. So ideally, we need two things to occur today. Ideally, we want to see price pulling above this, closing higher. Ideally, on an hour, 4 hour chart would be even better, showing us that momentum drive. Then a consolidation will probably be the case. We could see price pulling back slightly lower. Whether it happens now or later, in this range here, you can see there's a ceiling level here. So we could see a bit of consolidation under the 1400 before we see price rallying higher, or we could see price just continuing higher this morning as European session opens and the UK market, and then a slight pullback and then a continuation to the upside. So as it stands now, CTC is well in our favor over this period. If you look at the hourly chart, the same is occurring. So 1400 has been breached. Got to make a note of that. So anybody looking at these small time frames, make a note of where the 1400 is, and you've got to say to yourself, great, momentum is trading higher. Ideally, I'd like to see price closing above this now. So in my case, I'd look to see an hourly candle close above here to confirm that the bulls are happy above 1400, and by doing so psychologically they'll be saying great, we're above here, let's look for support, and then let's look for that all-important continuation higher. Swing highs dictating price action. A lot of momentum through the Asian market session this morning, really punching higher. Not even a very small consolidation just at the underside of the 1400. We saw the 38.2% fib retracement area on the hourly, but that's pretty much took it back to price support and resistance at the 39,400. You can quite clearly see here a lot of resistance through there. To make it slightly bigger, and then we saw price continue to the upside of 1400. So as it stands now, we need to see 1400 being breached and closed above. Yeah, I've plotted some pivot points, some support, price support and resistance. We have one here at the 1420 mark. This is where we could see this consolidation taking place over here before we see further extension. A break above 1420 would definitely see further extensions higher. If we do see a pullback and it fails to find momentum at 1400 and we see a pullback, then this is probably the likely place for that retracement to take us back to roughly around the 1387.50 mark. Below that will take us back to 1380.100 and 37.500. So those are potential support areas of price that had to pull back and continue lower. I doubt that is going to be the case, but as it continues higher, then look to see if we can find support on the 1400-ish area, and then we can bounce higher. Relative strength index definitely moving with price action. That's what we want to see. I've plotted RSI here to give me an indication if I'm seeing divergence, convergence. But as price has gone higher, yes, we have seen the initial move overbought. So we saw a slight pullback, and now we're seeing a second attempt, which is also going back into overbought. So we could see a consolidation. That's what we want to see. That's what should happen. Consolidation above a price support and resistance, then a pullback of the RSI. But as long as it stays above 50, still confirming that there is still bullish momentum in that. We will see the consolidation back to the downside, and then we should see that continuation going into the remainder of today. That's how it should pan out. Let's see if that remains to be seen. Next up is sterling. Let's have a look at the daily time frame. Slight hesitation yesterday, a huge wick like its European counterpart, massive downside movement. That failed to pretty much break and close lower than the 5900 mark, which happened to be the bottom of that wick, and so subsequently saw the pullback yesterday afternoon as the meetings got underway in Brussels last night, and we saw price action closing still lower than the previous indecision candle. All this action coming around or happening around the all-important 1600 mark. Now, why 1600? Well, 1600 has been a very strong support and resistance level in the past, and if I just make this nice and thick, you can see, if I zoom out for all of those who haven't looked at these charts before, you can see quite clearly that along this area here we've had a very significant support and resistance level. Yes, we've had breakouts. Those have taken us down to the 5900 mark, which we have plotted, and that's where we needed to be seeing price trading above not so long ago. But you can see quite clearly that 1600 has been a very strong psychological support and resistance in the past, and sure enough, we've seen price headbutting itself. Notice to be an upside candle followed by a doji, followed by a bearish engulfing here to the downside. We saw price really pulling down to the low end, and we thought, well, this is the pullback that we're expecting. However, as the news filtered through on Euro last night, all the good news that Greece was pretty much the winner of that, to be honest with you. They've got the great end of the stick. We're still trading above the swings. Swing highs depict upside trend. So that's still what's happening here. Definitely swinging high. You can quite clearly see swing high, swing high, swing high. And putting in some nice support areas along the way, which happen to be breaking above price support and resistance here. Noticeably here at the 15700. Noticeably a nice strong one there. And now, as with the euro, we do need to see price closing higher than 1600. So this is where patience becomes quite important. We could effectively give away this entire week because we've had we've had almost a week of indecision. Yes, we've had a lot of trading ranges, and yes, you can actually make money from that intraday. Not saying you're not going to, but it has been very indecisive. If you're looking at the long-term aspect of it, we have seen 1600 being headbutted a number of times. Not once has price closed above this area. It's paramount that we see that 1600 is breached, because by doing so, the actual psychological side of things out there will tip its hand for further bullishness. The last thing we want to do is to try and be buying into a trade which is not really looking at any upside movement at all. So a lot of wicks. The past 2 days we've seen a lot of wicks heading towards the 1605 mark, but never closing. And so it's very, very important that we see price closing above this, because if it does do that, then it's really telling us that the emphasis is still looking bullish upside, and then we could look at ultimate targets to the upside. Here in particular, there's one roughly around the 1500 mark, which will take us back up to the all-important institution moving average. We are still trading below the institution moving average. Okay, so it's still bearish. Got to be trading above the institution moving average, because by doing so, it will be trading very bullish long term. And by doing that, it's setting us up to look at potentially 1650 or the 1645 range as our ultimate target going forward for the remainder of this year. So 1600 needs to be closed and needs to be breached, and it needs to close ideally above 1605. By doing so, it will definitely mean that 1615 is that price is still looking favorable to the top side, and we should be looking to gain entry to the upside. Plot to the 30-minute chart, you can quite clearly see here our intraday support and resistance levels on this time frame. The 1602.50 mark happens to be a noticeable support and resistance level in the past. We have to breach that to be looking further to 605. Ideally, in my eyes, I like to see 605, which is resistance 1 being broken and trading higher. You can see there's a slight upside swing now. You can see prices testing that. If you see if the CTC goes red on this candle on this chart or on the 15-minute, look at potentially 1595.50 as your first target, back to the institution moving average as the consolidation as a first support 1, support 2 here at 5900 if this doesn't stack up here, and ultimately down to 158500 as our third target if and when price fails to find support at these levels. As it stands, we're in a consolidation range against the major trend. That's going to occur. If you're trading into this upside movement, 100% is your initial target, which takes it back to 1605. It hasn't managed to rally. It broke above 6108, 61.8 fib, and subsequently fallen back. That's pretty much straight into this area here where we've had price support and resistance. There is a area here noticeably. So ideally, as it stands now, we could be looking at this level here at the 1595.50 as our first potential target. If it breaks that, then look down support 2 and 3. If not, consolidation in this area here would definitely set us up for further extensions higher. US dollar Swiss franc. This is going to be a very interesting one to watch. Like its two counterparts, this should be doing the total opposite. You can see the consolidation going into the institution moving average, trading into the institution moving average, or this 8750 mark, 8700 mark, as we have the 50 period moving average moving higher, slight change here, but still moving higher, and the 200 period moving average pretty much just trading underneath. Notice how small these ranges are, very indecisive. Spinning top yesterday, engulfing the prior day's range. However, the Asian market session has seen price fall even lower. It has now engulfed that bullish upside movement. So the one taking one counts as the other. This bullish on a support could have seen extensions higher, but that failed to materialize. We've seen price putting all the way back down again. However, this is still a daily candle, so a lot can happen today, guys. We could see price coming all back down again, and then only for price to rally during the US session, going into the US session, and we could see an upside candle still being posted by the end of close today. So very interesting. We should see consolidation in this area here. Further consolidation. I don't think the Swiss government wants to see price trading lower than 120 on the euro Swiss franc. If it continues to fall, then we might see intervention yet again from the Swiss government. And hold on. This is the thing that you got to worry about Swiss franc now, because of this candle here and the fact that I just did it without actually telling anybody about it. If it had to go below this area here at the 8600 on the US Swiss franc pair, the Swissy, that would also correlate with lower than 120 on the euro Swiss franc, which would mean that we potentially could probably see another intervention. They don't want price trading lower than 120, and they will probably step in again if that is the likely case, if they see price trading lower. So downside swing, you can see quite clearly there a failure to punch higher, and we are on a lower swing, and we should see consolidation in this area, guys. So 87, if we saw price lowering lower, it has to close and find support above this 870. Failure to do so would be trading quite close to that area where intervention might be on the lips of those in Switzerland. So 8770 is way below us. There's still lots of movement here. You can see the CTC on an hourly is well extended negative. We have had higher swings, but look, this is the beauty of this particular template. You wouldn't have gone long here because you'd be trading into a prior support and resistance. Here's a prior support, and there's a resistance line here at the 8865, and you're trading still below the institution moving average, and the CTC have told you not worth getting into. Same here on the 30-minute chart, trading higher. Yes, you can profit from it, break above the support and resistance here. We would have looked at that potential target here that we saw in the hourly as our first potential target here at the 8860 mark, and you might have profited from it. The fact that it didn't go any higher just stemmed that the overall sentiment of the market was still looking bearish for this pair, and we've seen the price then fall back going through the Asian session. So where to for this price? Well, as I mentioned, you can quite clearly see yesterday's trading range, definite support at 8740. Got to see that being breached, the downside to see any further extensions lower. Lower swings dictates price actions falling. Moving averages all above it, all in order, 20, 50 and 200 CTCs in our favor. So 8740 is potentially our first target. Got to see a bounce here. Or let's have a look and see relative strength. Let's see what strength is doing. Are we seeing more buying going into this morning session as we attempt this lower low? Yeah, let's have a look. Let's have a look and see what she's saying to us. Yes, we are trading a low. Noticeably, you can quite clearly see if we see a support being found here and price heading higher, then you'll notice that the RSI is in tune with its counterpart. Excuse me. This previous swing here, are they on the same length? Slightly lower, if I can be very honest with you. Let me get rid of that. On par, which is good because this price is trading lower. It is still, RSI has found a support here. It needs to be trading above 50 to then still be classified as a bullish change in sentiment on the 30-minute, and you could see potential support being found at 8740. We should be looking upside, further upside movement on this pair. You can see quite clearly as price has been moving lower, then the RSI has been trading lower. So that that's all in favor. Here, on the other hand, is we've seen a clear indecision candle as we've gone into the European session open. A lot more happening at the upper end of this indecision candle, and as it stands now, this 30-minute candle is looking upside favorable. Notice we're still trading below this swing. It's very negative swings. The downside got to go above that. Ideally, we're seeing a potential support being found now on our relative strength. As if that is a definite support here, if this candle can close higher, then it'll be swinging higher, and the RSI is looking favorable as price is moving higher. Ideally, we'd like to see the RSI above 50 to confirm that the momentum now is looking favorable upside, and then we should be looking for entry signals to the positive. I think once RSI is trading above, then we should be trading above the institution moving average on this time frame, which will be indicating that we're starting to get that bullish sentiment coming in at the smaller time frames. Then we should be looking for clear indications of upside to at least 8770. We've been there before. There's no reason why we don't have to be there again. 86, the 8860, 8870, that area there. Last pair of the day is US dollar Japanese yen. Let's have a look at. Okay, yesterday we had a slight hesitation, small support being forged by doing so. However, that hasn't stacked up this morning on the Asian market session. And going into the European session open, we've seen price continue to fall to the lows that we saw roughly around the 75, 70, 50 mark. Thereabouts. So hesitation, more happening in the upper end of the wick. Remember, this is a daily candle, so it hasn't closed yet. We could still see price pulling back. It's still happening. We've had 2 prior days of that occurring. It's still trading up below the prior swing resistance here. Prior support, break of that consolidation, and now it's finding resistance, and we've seen price trading lower. As I mentioned, this candle hasn't closed yet, so we are seeing bearish sentiment. If it does close lower, then it means it's finding resistance at a price support, and we should see continuation lower. You can see the downside trend is still in play, and if that's to be the case, you can see that there's a failure at that resistance level here, this downside trend resistance. So still negative momentum for this pair to the downside. Are we going to see the Japanese government intervening? Let's see what happens, because we are trading at an all-time low now. We're still continuing to find lows as we head to the downside. And if you look at the previous bounces along here, then ultimately we can look at 75.50 as our potential target overall. Don't find support here. We are nearing those very strong support and resistance levels to the downside. So having an indication where price is likely to go to, because we've seen bounces, noticeable bounces along this trend line support, and ultimately we could look here at roughly 75, 50 or 60 being a support, and then we could see potential bounce upside. Whether that actually also comes in play with the intervention that might possibly occur If we continue to see lower lows being formed, it remains to be seen, but ultimately we could look at this area here, this trend line support as potentially our target. So intraday, you can see all the indecision. We had slight movement 4 hour to the side, and then we saw a massive failure at this level, and all the moving averages crossed over. CTC went red. Break of this consolidation range on the 4 hour. Could look for a decent breakout candle, and then we traded lower. That would have been your first target here at 76.10 or 76.15ish price support. Hit that. Now we're just trading to the. We've been trading lower, however, the highs have been getting lower, and price action looks like we should still be seeing further downside for it. CTC on this time frame, well, most time frames all red, confirming that the sentiment is still negative. 30-minute chart, you can quite clearly see here. This happens to be our 7600 is our intraday pivot. Major pivot area, and you can see price action on the upper end of that, and now we're seeing a bit more happening on the lower end of that. CTC on this time frame also gone negative. The institution moving average being tested this morning in the Asian session, but not stacking up, and we've seen a failure of that through the latter part of the US session and into the Asian Open, and we've seen price falling lower. So ultimately, 75.70 would be our next potential target on this particular time frame. So that's it, guys. Hope you have a fantastic trading day today. Keep your trading simple. All we're looking for now is, after yesterday's last night's announcements, we have seen euro and sterling pushing higher. We want to see confirmation. We want to see support above those resistance areas. 1400 for euro and 1600 for sterling in particular. Find support above those areas on our hourly and stuff like that should dictate that we should be looking for further upside movement on those pairs. So wait. Be patient, look for a definite confirmation, bullish upside candle on those particular areas of prior resistance, and then we should be looking for upside favorable. The Swiss franc, same. We are trading into price support and resistance. I don't think the Swiss government will want to see price trading any lower, and might even think about interventions. The same with the Japanese government chart. You can see the start of today. We are trading low above previous support. And if we keep continuing to fall, then ultimately we could look at possibly 75, 60, 70 being our next potential target. And if we get to those lows, we are pretty much coming into contact with support on a daily long-term trend support. And if we see price trading any lower, it'll remain to be seen if the Japanese government steps in to intervene. So as it stands now, if we see any further downside, then look at potentially 75, 70 as your first target, 75, 60, which brings us back to that daily support trend, and then we could look potential bounce. Plus an RSI to see how price is moving in conjunction with that. Is it giving us a signal that we're seeing bullish sentiment creeping in? And if so, look to see any bounces to the upside and then take that. That's it, guys. Have a fantastic trading day, and I'll see you tomorrow. Trade serenely.